Good morning. This is Larry McMillan with a stock market update on Monday, July 21st. So the S&P 500 index continues to plow ahead. It's making new highs again this morning as we speak. And overall, the situation remains bullish. We are starting to get some pretty severe overbought conditions, but overbought does not mean sell. And so we'll wait until some sell signals actually appear before taking any kind of bearish action. The only sell signal we have in place right now is the McMillan volatility band sell signal, and that could be stopped out today if S&P closes at or near its highs. Equity-only put-call ratios have plunged to the lowest levels we've seen in quite some time, and so they remain bullish for the stock market, but they are in overbought territory because they are so low on their chart. So optimism is building up. The put call ratios are a contrary indicator. So that would be, a sell signal when the optimism peaks, but it hasn't happened yet. Breadth has struggled a little bit, but the breadth oscillators are still staying on their respective buy signals, and that will certainly not change today, with breadth being very strong this morning. New highs versus new lows. We'll continue to see new highs dominate new lows, so that's bullish. We are seeing another actually overbought condition, and that is that the realized volatility of the S&P 500, the 20-day historical volatility specifically, has fallen to 8%. And that's an overbought condition that will eventually produce a sell signal when it rises back to 10%, but that could take some time. The implied volatility, VIX, has remained fairly low, 16, 17 area, and so that's bullish for stocks as well, as long as it stays down there. A VIX close above its 200-day moving average, which is around 1960, would be some cause for concern, but that's not the case right now. So we have two VIX-related buy signals that are in place: the spike peak from nearly a month ago, and the trend of VIX. VIX is trending lower. That's bullish for stocks. And then finally, the construct of volatility derivatives, the futures term structure sloping upwards. That's bullish for stocks, and we're seeing a healthy premium on the VIX futures, so that's also bullish. So basically, we're seeing some overbought conditions, but everything except the MVB signal is bullish. So we're remaining long. We will act on confirmed sell signals when they occur, but we're not going to jump in front of the bullish freight train and try to pick a top when none really exists. So we'll wait for confirmed sell signals before taking any bearish action. And we also are rolling up long, deeply in the money positions, long calls specifically, to higher strikes as the market advances. So overall, things are still remaining pretty bullish. VIX typically has a low, sometimes a low for the year, but certainly a low for the quarter, or let's say in July. So I would expect more negative action perhaps beginning in August, but right now things look pretty bullish. So I invite you to visit our website, take a look at our newsletters where we cover these things daily. And meanwhile, have a great week trading.